Hi everyone and welcome back to another video of Kiwi Investments. It is August 2024 and it's about time I do my annual stock portfolio update video. This year my portfolio value has grown over $200,000 and I will not just be showing you my portfolio but I will also be selling quite a bit of stocks in this video. So let's get started. Let's first start with my stake portfolio. As you can see, my stake portfolio is worth $14,989 if we convert it to New Zealand dollars to keep the currency consistent throughout the video. We see it's worth 25,000 New Zealand dollars. Right now the stocks in my stake account is giving me a return of 264%. So the money I have put into my stake portfolio has more than doubled. Let's click on holdings to see how that happened. As you can see, Nvidia is the best performing stock here, sitting at a return of 481%. Next up is Microsoft, sitting at a return of 60%. These stocks up here were free and you can get free stocks from stake as well if you use my referral link in the description of this video to sign up to stake. And I should point out there are other referral links to other platforms as well. So if you're thinking about signing up to Sharesies, Hedge and or Tiger Brokers, you can get free stuff for yourself if you use those links. I'm not going to sell anything here. I'm just going to leave it and see what happens. Let's now move on to my Tiger Brokers account. If you move this up, you see my entire portfolio. And the only ones that are doing good are Apple, which is giving me a return of 71%, and Taiwan Semiconductor Manufacturing Company, which is sitting at a return of 33%. All other stocks are in the Hong Kong Stock Exchange and is sitting at a loss. Overall, my portfolio in my Tiger Brokers account is about $9,759 and if we convert that to New Zealand dollars again, we see that it's worth 16,120 New Zealand dollars. Not going to sell anything here and let's move on to my ASB account because we don't talk about ASB enough on this channel, and that's because it is not that popular amongst new investors due to the high brokerage fee. And as you can see, the stocks in my ASB account is not doing well. I have put a total of $41,854 and it's gone down to $33,970. But the problem with this is that Z Energy should not be here. Z Energy was acquired by Ampol in 2022 and it was delisted from the New Zealand stock market.
Z is for New Zealand.
No, it's not. It's more like Z is for.
Ampol powers our way of life. Ampol, Australia's own.
Anyways, this money was paid out when Z Energy was acquired, but it still shows up in my ASB portfolio, which is annoying. So if we minus this from the total market value, we got 30,577, which is how much my portfolio in my ASB account is actually worth. The only company that is doing well here is Meridian Energy, which is up by 62%. I do want to decrease my portfolio value here, and the one I decided to sell is the Smart Share New Zealand Bond ETF. I have 1,500 shares of it, and right now it's down by $169.50, which is 3.66% below what I bought it for. But I do not consider this as a loss because I bought these shares in 2019 and I've been collecting dividends ever since then. So if we add all these dividend payments I received from this ETF, it adds to $454.96, which is far more than the decreased value amount. To sell, click on it and click on sell. Make sure the order direction and the stock is correct. Click next and type in how many shares. We know we have 1,500. I'm going to sell at market price, and if we click where it says view dip, we get a better understanding of what's going on. We can see that we have two sellers selling 107,000 shares and their asking price is $2.98. Meanwhile, we have one buyer wanting to buy 47,714 shares at $2.97. So when I'm selling at market price, I am likely to sell to this person who has the highest offer at $2.97. The next thing you have to do is enter your FinPin, which the share registry would have given you when you first bought shares. If you're using other platforms like Sharesies, Hedge and or Stake, they don't do this because technically the shares are not under your name, but you still own them. Anyways, we covered that in a previous video, so let's move on. You have the big sale sign here, what you are selling, how many shares, the price I might get for the shares, the order value, brokerage fee, my phone number down here, and I'm going to go proceed and place order. You can track your order if you want to, but let's move on to Sharesies. As you can see, the stocks in my Sharesies account is worth about $31,542. If you click on view chart here, we can see what's been happening over time. The highest amount I ever put into my Sharesies account was $46,275, and since then I've been selling and withdrawing money out of my Sharesies account, and now it's about to go down even further. But before we do that, let's have a quick look at the portfolio. Infotel is the best performing stock, up by 129%. The next after that is EBOS, which is up by 65%. The worst performing stock is Kiwi Property Group, which is down by 30%. 1%. And all the other stocks are somewhere in between them. And now it's time to sell. The first one I'm selling from here is actually EBOS. If you have a look at this investment, I put down $4,000 and it's now up to $6,000, giving me a return of $2,600 profit. Now this can be misleading because if you get the calculator out and put down $4,050 plus the return of $2,657.33, we see that it does not match up with the investment value figure here. And that's because the return figure takes into account the dividends you receive from your investments as well as the unrealized gains and losses, which is the stock price movement. So basically each platform calculates the return figure a bit differently, and it's worth figuring out how the platform you might be using is calculating your profits and losses. If we come down here, we see the amount of dividends I have been making from this investment, and I have been making over $100 worth of dividends per year. But now I'm going to sell it. The market is open right now and it should be sold straight away since I'm going to sell everything at market price. Sell all, estimated fee is $25, and sell. And while that's selling, I'm going to sell some more. But before selling the rest, I'm going to buy a plan. If you don't know why I'm buying a plan, then check out this video on how you could cut down on the brokerage fee charged by Sharesies. I have even made a free interactive table for you to figure out which plan would be the best for you. Anyways, I'm going to buy the $3 plan and come back to my portfolio and come all the way down. I'm going to sell Westpac. And while I'm selling, let's talk about why I'm selling. Well, if you've been following my channel, you would know that I have moved to a stage in my life where I would like to own my first property. We made a conditional offer and we are very confident that we will get it. I'm selling some of my stock not because of economic or political factors, but because of my personal circumstances. When you get a mortgage, your bank makes the most amount of money from you in the first few years. Majority of your repayments will go to paying off interest in the first few years. I don't want to do that. That's why I'm selling this year, because I want to reduce my loan amount as much as I can as early as I can. Alright, we still have $76 remaining on this plan, but I'm going to cancel my plan before I forget to cancel it, and then I'm going to sell one more. Alright, we have completely sold out of 5 holdings in my Sharesies portfolio. Let's now look into my hedge account and sell some more. Here I am logged into my hedge account, and let's change this from US dollars to New Zealand dollars. Come all the way down and we see that the current stocks in my hedge account is worth around $129,351. Current unrealized profit is around $36,102, which is a 38.72% return. There are only 2 stocks here that are not sitting at a profit right now. The first stock I'm going to sell is actually the stock that's giving me the best return, and that is Devon Energy Corporation, which is giving me a return of 237%. If we have a look at that, come down and have a look at fees and totals, we see that I have put down $500 into Devon and I have collected nearly the same amount in terms of dividend payments, which is amazing. If we have a look at the transactions, you see that I've just been doing nothing except collecting dividends, and more dividends. And here at the bottom is my original buy order. I bought 39 shares at $12.81 per share. Right now the current share price is $43.17 per share. So that has gone up by a significant amount as well. So it's been a pretty good investment. I bought these shares for $500 and now I'm selling those shares for $1,682, which is pretty good. Come back to portfolio, and the next thing I'm going to sell is ExxonMobil. It is sitting at a return of 103%, which is a $1,500 in profit. I have collected a lot of dividends from this investment as well. Come to transaction, is the same story, just been collecting dividend payments. And I initially bought these shares at $56.70 per share, and right now those shares are worth $115.68 per share. So I pretty much more than doubled my money from this investment as well, especially collecting the dividend payments I have collected. And now I'm going to lock in those profits by selling them. Come back to portfolio, and the next thing I'm going to sell is Adobe. It is up by 5.77%, which is about $115. Adobe does not pay out dividends to its investors, so I'm just going to sell. So I have sold quite a bit of my stock portfolio, locked in some profits, and now I'm going to put that money towards my mortgage to save even more money on interest. If you're interested in how my first home buying journey is going, then check out this playlist. See you in the next video.